Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are going over the best stocks that will give you passive income. So the stocks that we are going to be analyzing and dissecting in this video will give you both a strong dividend yield on top of stock price appreciation. So these are what's called hybrid stocks because they give you passive income in the form of consistent dividends, and they also have great growth for the overall company and stock price appreciation. So I think these types of companies should be in everyone's portfolio because they perform quite well in times of stock market uncertainty as well as full-on bull market rallies. So clearly these should be and make up somewhat of the cornerstone of your particular portfolio depending on your investment style and what you're comfortable with for your risk to reward ratios. But without further ado, let's go over some of the best growth and dividend companies that will give you steady passive income either in the form of cash flow such as dividends or in stock price appreciation. And remember, these companies have all of this. Now, I'm only going to go over half of these companies. If you want a part 2, remember to comment down below and smash that like button right now so you can let me know if you want a second half of this. And I also have either a check mark or an X mark next to the companies that I personally own and why I like them. And some of the companies on this list are companies that I don't like, but you should feel free to look into them because even though they don't address or coincide with my investing style, maybe they could be right for you. So without further ado, let's jump right into it with our number one pick, which is going to be American Express Company, ticker symbol AXP. They have a strong dividend yield of around 1.43%. This is more of a growth company that has a dividend, and they also have a very impressive 5-year compounded average dividend growth rate of 8.22%. American Express is a American multinational credit card services company, and recently they've actually had an increase in their price targets from Citigroup, which is another very respected financial institution that believes that this company should be trading at around $159 over the next 12 months, which means that currently the stock price is undervalued right now, and they also give them a neutral rating. So if you want very consistent dividends on top of a very strong growth company, then ticker symbol AXP and the company American Express could be the company for you. So at least put some of these companies on a watch list. American Express has also made consistent dividends for the last 30 years. So they have consistently offered and paid out dividends for 30 consecutive years, which is absolutely phenomenal. And currently they are offering investors a quarterly dividend of 52 cents per share, which is very strong for such an aggressive growth stock. It's so good, in fact, that Warren Buffett, who is arguably one of the best investors in history, is a leading shareholder in this particular company as of Q2. So clearly, this is a phenomenal company to own and have in your portfolio, especially if it's backed by someone such as Warren Buffett. With that being said, let's move on to our number 2 spot, which is going to be Cigna Corporation, ticker symbol CI, which currently trades for $293 per share. Now, this does have an X next to it, which means I do not own this company in my portfolio as of right now. And the reason for this is because I think there is another company, such as United Health or companies like that give me a better risk to reward and upside ratio than this particular company. However, the company does offer a pretty strong dividend yield of 1.54% and a 5-year compounded average dividend growth rate of 151.2%, and we will discuss why that is so high. Cigna Corporation is an insurance company that provides healthcare services and insurance to their customers. Currently, they pay a quarterly dividend of $1.12 per share, and the company has been increasing its dividend for the past 2 years consecutively, and that's why we have seen this rate be so high, because they've only done it for 2 years. For companies that have done it for 10, 20, 30, and even 40 plus years, clearly we're going to see that 5-year compound average dividend growth rate substantially decrease. The only reason Cigna is so high in this particular regard is because they've only increased their dividend and paid out their dividends consecutively for the past 2 years, which is another reason why I do not own this company, because I think there are other companies that can give us that good passive income. But let's talk about their price target. Recently, UBS lifted their price target on Cigna Corporation up to $330, and they gave it a buy rating. Again, this would mean that the current stock price of $293 is substantially undervalued compared to the price target of UBS. So this is clearly something to look further into, especially if you want to focus on that stock price appreciation and growth aspect of this company instead of the passive income dividend of this company, because clearly there are better dividend stocks and growth stocks than Cigna, but Cigna has a good mix of both. They are going to have good dividend appreciation over the long term, hopefully, and they are also somewhat undervalued because they should be trading at around $330 according to professionals. But with that being said, let's move on to our number 3 spot, which is Lennar Corporation, ticker symbol LEN. They offer a dividend yield of 1.86%, and they currently trade at $80 per share. Their 5-year compound average dividend growth rate is 44.3%, and this is a Florida-based construction company, and it's one of the leading home builder companies and sales companies in this particular space. So overall, they are pretty good, but again, we have another X next to it, which means I don't have this right now in my personal portfolio, but that doesn't mean it's not a good company for you to buy or for you to look into. Now, the reason why I don't have this particular company is that their quarterly dividend is only around 37.5 cents per share, which is not very impressive in my particular opinion. And according to Raymond James, they have a price target on this particular company of $90 and an outperform rating on their shares. So I don't think that the price target is high enough, and I don't find the dividend very impressive. If anything, I would wait for this particular stock to drop in price due to macroeconomic factors that we are facing in the economy right now, because I anticipate that the housing market will start to crash and cool off, and if that happens, that means this particular stock will also cool off and drop in price, which will not only increase their dividend per share, but it's also going to give us a better buying opportunity and a better growth trajectory toward $90. For instance, if this company fell to around $60, then I think it would definitely be worth buying, but as of right now, I just don't have it in my particular portfolio, but it's all up to you. Now we have come to another company with a check mark next to it, which means I personally own the company, and that is none other than McDonald's Corporation, ticker symbol MCD. They have a very strong dividend, and also I want to add that as we go on and further in this list, you're going to see the dividend yield increase the further we go. They have a dividend yield of 2.3% and a 5-year compounded average dividend growth rate of 7.98%, which is crazy because McDonald's has one of the largest and longest track records of increasing and paying out their dividends, which basically puts them as one of the best dividend companies on the stock market right now because they have consistently raised their dividends for the past 45 years in a row, which is crazy. The current stock price for the MCD stock is $237 per share, but if we actually look at the analysis that Stephens has come out with about this stock when they initiated their coverage on it, they have an overweight rating and a price target of $280 per share. Clearly, the company is somewhat undervalued right now, and it gives us both a strong dividend yield and it gives us good future stock price appreciation. So we are getting growth in 2 ways, and technically we're getting growth from 3 ways because the stock price is going to increase. That's one way of passive income. We're getting a dividend yield of 2.3%. That's another way of passive income, and they are compounding their dividend growth rate by 7.98%. So that's a third way we are going to receive some type of income and a growth rate for this particular company, which is why I personally own it, and that's why we have a check mark next to it. I also believe that this company will outperform the market in the short term because this is one of the companies that are going to be very resilient in times of stock market uncertainty and economic uncertainty. Then we're going to touch on another stock that I really like, which is American Tower Corporation, ticker symbol AMT. This company trades for $206 per share, and again, I do own this company, as you can see from the check mark. Their dividend yield is even greater than the other companies that we have talked about, which is 2.63% for their dividend yield as of October, and they have a 5-year compound average dividend growth rate of 11.04%, and we're going to discuss why that is so high for such a great company. American Tower Corporation, ticker symbol AMT, is a real estate investment trust company that owns and operates properties related to communications infrastructure. So again, this is a really good company, and I do own it in my personal portfolio. The company also recently announced another 3% hike in its quarterly dividend payout of $1.47 per share. Again, this is absolutely fantastic. So I know they have a good, decent dividend of 2.63% in regards to their dividend yield, and they have a crazy growth rate, compounded average dividend growth rate of 11.04%. But what about their growth rate? Well, according to KeyBank, they maintained an overweight rating on this company and a price target of $264, which is substantially higher than the current stock price of $206 per share. This is another reason I love this company, because we are getting a pretty solid dividend on top of fantastic compounded average dividend growth and a $1.47 per share payout every quarter, on top of a great price target of $264, which is what this company should be worth over the next year. So this is one of the stronger dividend stocks and hybrid passive income stocks that I personally own, because again, we're getting that good dividend and we're getting good growth. Some investors just like to invest into dividends, which I don't really like that strategy that much, and then other investors just focus on growth, but they get hit extremely hard during times of stock market pullbacks, downturns, bear markets, crashes, and recessions. So we want resilient companies that will not only pay us passively and give us passive income through dividend payouts during times of stock market uncertainty, but we also want these companies to be able to grow during times such as stock market rallies and full-on bull markets, and I think American Tower Corporation, ticker symbol AMT, does just that. So if you want more videos just like this one, I do want to do a part 2 of this particular video, because remember, we didn't even go over the best passive income dividend stocks that also have fantastic growth rates. These are only the first couple that I wanted to point out to you, but trust me, in the next video, we're going to be talking about companies that are even better than all of the companies that I just mentioned. So if you want a video on that, go and comment down below that you want to see another video like this one. Go and smash the like button so I know what videos you all want to see more of from me. Subscribe if you are new, especially if you want to see that upcoming video that I have for you, and I will see you in the next YT video.